I think the comparison between the economic conditions now and late '98 are really astonishing. You know, late '98, we were in an economic expansion that was probably more than 90 months, so longer in the tooth than the one we're in now, which is about 60 plus. We had the Asian financial crisis then. You know, now we have this global anxiety over trade war. And the Fed went into a series of interest rate cuts and cut a total of 3 times for about 75 basis points. So all of this very similar. Unemployment actually was lower, is lower now than it was then. You know, 4.6 now, we're about 3.6, 3.8 now. CPI kind of inline-ish. And the Fed went through this late cycle monetary easing and cut rates. And what happened was the S&P, because of this late cycle expansion, you know, was up over 50%. Crude, Brent crude went from a condition of normal contango to backwardation over the next 18, 20 months. And to the energy markets, I think it was astonishing because the energy tape alone went up about 40%, but the oil service index, in which now a lot of those components are really highly shorted, thrown out names with the bathwater, that was up over 100% between late 98 into 2000.
So what's your outlook for oil right now in current conditions?
Say again?
What's your outlook for oil right now in current conditions?
I would say crude right now, you know, I think we're probably oversold still at these levels. You know, I think crude kind of the range gets above 55, 56 is a nice gap to the upside there. You know, I think we could easily go to mid-high 50s into the low 60s, especially as rate cuts start coming in July and probably continue through September and the end of the year.
Yeah, it's really fascinating, Roberto. I mean, to think about the interest rate shock, a series we've been doing all week, but we haven't talked about oil as well. Are you surprised that oil didn't move more than 3% yesterday on these headlines? It would have been a time that it should have gone up 7 or 10%.
Yeah, exactly. Yeah, you know what? I was a little surprised. You still had WTI crude down about 5-6% a week, so maybe we retraced only half of that loss. There's just been a total malaise with the energy sector as a whole, and I think that kind of carries over to the physical. But I think that's still really understated. And as you know, as Halima kind of alluded to, these tensions are not going to get easier. They're going to get a lot harder and a lot more escalation, I think. And we have so many U.S. assets in the area, in the Persian Gulf, around the area, in the small proximity with Iranian fast boats, which they call their Navy. It only takes one other kind of simple thing to happen before WTI is north of 60.
Yeah, I mean, I think one of the things we could think about as well is, I mean, the market is being held down so much by trade war concerns. If we get a better look on the trade war story, if we get a better optic coming out of the G20, I mean, I think that could be a real catalyst for oil to move higher.
Higher?
Well, yeah, if we have a
because global growth slowdown concerns will be eased?
Yeah, right now, I think oil cannot get a real bid because we have such high demand fears. I mean, I think this is really weighing on the market because of the trade war. So if we get any off-ramping on the trade war story, I think the geopolitics story becomes more important.
But, you know, Roberto, what's amazing, too, is, I mean, the tanker attacks aside, when the Iran sanctions were put in, you know, you're talking about removing 1.5 million barrels a day from the global export market, and the global oil market yawned. I mean, is that because we're going to go 13.5 million barrels a day in the United States?
Oh, I think we're definitely on a trajectory to go north of 13 million barrels a day by year end. I also think you're getting a kind of little abnormal buildup in inventories globally because of IMO 2020 coming on next year. So as refineries continue to boost up their utilization rates into IMO, you know, I think you're going to see a lot more product get pulled through the system. So a lot of these inventory levels are maybe a little abnormally high than what they look to be on paper.